What's going on, everyone? This is an update on my portfolio 1 week after I started a challenge to trade a $500,000 portfolio to $5 million without making any subsequent deposits. Now, before I go any further, please note that I'm not a financial advisor and nothing in this video can be construed as financial advice. This video is made only for your educational or entertainment purposes. Currently, I'm up around $15,000 or 3%. I'm only around 4.485 million from hitting my goal of $5 million. The market over the last 5 days has been a little bit of a roller coaster. We had a big drop on Friday when the market sold on news that Jim Bullard, the head of the Federal Reserve of the Bank of St. Louis, is penciling in a rate hike in 2022, only to bounce back with a vengeance the following Monday, when the headlines changed to how fear of inflation is now easing. I made an earlier video on why you should never panic sell. Feel free to click on the link that I provided if you wish to watch that video. Currently, my single largest holding is in QQQ March 2022 expiration calls with a strike price of $325. This position constitutes around 12% of my portfolio and has been up almost 37%, as you can see here, since I opened the position. I bought the call options at the beginning of March when QQQ was trading in the $320 range, with the intention to hold for at least a year to take advantage of the tax benefits of holding for 1 year or longer. I'm also holding on to QQQ 1 year out puts that expire in March 2022 and May 2022 with strike prices of $310 and $320 respectively. Currently, these put options are up around 55% and 39% respectively. I've linked another video that explains how to profit by selling puts and collecting premium. Feel free to click on the link if you want to learn more. In addition to QQQ options, 35% of my portfolio are in big tech, with 3% in Apple, 2% in AMD, 7% in Amazon, 6% in Facebook, 6% in Google, 6% in Microsoft, 4% in Netflix, and around 1% in QQQ ETF. With the exception of AMD, which I bought last Thursday near the highs of the day, all 7 stocks in QQQ are up since I last updated this video on June 19th. Further, with the exception of AMD and Netflix, the other 6 stocks in QQQ are up since I entered their respective positions, with Facebook being up around 26% and Google being up around 17% since I purchased the respective stocks. I've been saying this on all my videos, and I'll say this again. I think big tech will outperform the rest of the market because big tech thrived during COVID, with most of the other sectors were barely scraping by. Big tech have record earnings, and they will continue to thrive as the world exits out of the COVID pandemic. The other half of my portfolio is spread across several sectors, including financial services with 7% in Goldman Sachs and 2% in Visa, insurance with 5% in Aflac, healthcare with 6% in United Healthcare and 2% in Cigna, pharma with 2% in Pfizer, home improvement with 7% in Lowe's, energy with 6% in ExxonMobil and 2% in First Solar, defense with 7% in Lockheed Martin, and tobacco with 2% in Philip Morris. Looking ahead, and with respect to big tech, I'm looking to increase my holdings in Google, Facebook, and Microsoft because each company has had record profits. In my opinion, each company will continue to have record profits, and despite the noise on big tech being under attack, the current market conditions are perfect for each company to continue to thrive and dominate their respective sectors. And looking at my non-big tech positions, I may increase my holdings in Visa, Goldman Sachs, Aflac, and ExxonMobil, while holding steady on Lockheed Martin, Lowe's, Pfizer, and United Healthcare. As the economy continues to reopen, the usage of Visa will continue to increase. Goldman Sachs and Aflac are in sectors that are moderately inflation resistant. ExxonMobil is also an inflation-resistant pick. It benefits from the reopening process and pays a pretty high yield that is looking safer and safer as the demand for oil increases. Stocks that I'm trying to sell are Cigna and First Solar, not because I don't believe in the long-term potential of these stocks, but rather because I need to sell something in order to buy more of the stocks that I mentioned earlier. And regarding First Solar, as you can see here, I sold a July 16th cover call with a strike price of $82.50, which is around $1 more per share or cost on a cost basis of what I bought for Solar for. The premium I received for writing the call is around $128. And my reason for entering this position is because if First Solar goes above 82.50 and closes above 82.50 at expiration, then I get to cash out and with a gain and I keep the premium. On the other hand, if First Solar does not go above 82.50 and close above 82.50 at expiration, then I keep the premium, I get to write a new cover call, and I get paid a new premium. Let me know in the comments below how your portfolio did over the last week and what positions you're looking to enter or exit out of in the coming weeks and months. As always, thank you so much for watching this video, and please hit the like and subscribe buttons if you want to continue to follow me as I trade my portfolio to $5 million. Thank you.